Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at a price action reversal on the Russell. So a couple things happened here. We had a big sell-off that pushed us all the way down here, and then we formed this inside bar that we had fired off here. Now once it fired off, we had a fake out breakout of the lows and a complete reversal right back up again. So we're looking to take, in this case, the risk we're looking at about 34 ticks. So we can only really take one contract here. Looking for a buy stop limit. Let's see if it... Right there. Right. So we got our buy stop right here at 1130.6. Once we get filled, our stop's going to go below the low here at 1127.0. One tick below the low there. And the overall target is essentially just going to be a 1-to-1. So we'll measure the low of this candle, and we'll just draw it right back up there. And we're looking at around 1133.9 for the first target, a couple ticks ahead of that, 1133.6. So we'll place our sell limit there. So now the trade's all locked and loaded, ready to go. Once we get about, well, at least a couple candles, we've got to get a little bit higher here. Now, because this is a price action setup, it is going to typically take a little bit more time. So what we're doing is we're just waiting for us to get filled here, 1130.6. Our stop is down here at 1127. The idea behind that is if this does end up failing back down again, we just want to get out. I don't want to hold it through a huge amount of time to the downside, especially when we're seeing a bullish reversal. So the last thing I want to see this thing do is fall back down below this low. That basically just invalidates the whole thing. So we're traded along here at 1130.6. Again, this is probably going to take 20, 30 minutes to actually fire off. Looking at the overall target up here at 1133.6, just a couple ticks ahead of a 1-to-1. Once we get to about 3/4 of the way there, then we can possibly look to move our stop to break even. Just want to be a little bit more careful about that. With these price action setups, a lot of times the closer you get to that 1-to-1 move, then it starts to kind of fluctuate a little bit before continuing, and we don't want to get stopped out on a fake out push down. So we do need to be a little bit careful of it. So what we'll do is on the way up, we'll just trail the bullish candles on the way up just to kind of lock ourselves in with this price action move. So again, we'll come back in a little bit. This is going to take some time, and we'll see how we end up on the trade, so we'll be back in a little bit. All right, we're back. Actually just tested and filled our order there at 1133.6. So let's cancel the stop order here. We moved the stop up a little bit just because when we were looking at this trade itself, we basically had a double doji. Now this one didn't close exactly like a doji, but it might as well have been just by the size of the body. So when you get a double doji like that, a lot of times that's just signaling that there's a lot of congestion in that area. It's going to be hard for it to actually pick a direction. So we locked our stop up a little bit closer. In this case, got filled at 1133.6 for 30. I believe it's 31 ticks, measure from our entry here. Yep, 31 ticks to the upside there. So $310 per contract, not bad. Because the size of the risk was a little bit big, we could have gone maybe 2 contracts, but that would have been kind of iffy. You're looking at about a $600 risk or so, which is a little high. So in this case, 1 contract. Entry at 1130.6 up to our target here at 33.6 for a solid, nice 31 ticks. So that's going to be the trade for today. If you have any questions about it, feel free to send an email to School of Trade. And don't forget to check out our trial at schooloftrade.com. Have a good one. Bye.